In this video, let's walk through what happened on Wyckoff principle based on volume and versus price action. NVO stock had a very high volume, around 67.5 million shares transacted on yesterday's price action, with a huge volume and the price bar or the price action also shown a harmony. So if you watched my yesterday's video, I was talking about Wyckoff analysis, how the stock is being accumulated by the strong hands. So I will be discussing more in this video about what are the Wyckoff principles and how that would have an impact over stock investment and decisions to buy and sell. If you look at the price action happened yesterday, which is normal than above average volume, somewhere around 67.5 million, and the price change is around 7.3 percentage. So this principle in the Wyckoff terms is like effort versus results, which is the second point, where high volume produces the high results. So let's look at other such high volumes happened in the last 6 months. So I had just brought out different days and what was happening with the volume. July 30th, the stock experienced a very high volume and also the price dropped significantly. This is due to a selling pressure where Novo Nordisk downgraded their full year guidance, and investors didn't like it, and then there were a lot of selling pressure. But who was buying at that time? Strong hands or institutional investors, they see the stock as very cheap and undervalued at the range of $44. So there is a lot of volume and the price both are in harmony during this July 30th time frame. When is the next highest volume seen? Somewhere around October. That was the somewhere around 25 million, and but this is a positive 6.63 percentage price upper. You can see this bar on the October 1st. The volume as well as the price uh, is harmony. That means higher volume produced at the higher price. It's exactly the second principle: high effort created the high results. So prices versus volume is in the harmony. And then the next above average activities in the volume, where you can see it on November first week. Basically November first week, and then the actions seen on consecutive days is related to the quarterly earning results. So the stock was under a shelling pressure, and it has been a good opportunity for the strong hands to accumulate more shares with a high volume, and then thereafter a recovery happened with a high volume as well. So during November first week and second week, you can see a continuously above average volume, more than 25 millions, with pre-earning positioning, and then the Q3 earning reports, and then there is some guidance cut and competition from Eli Lilly fear. So almost like consecutively 3 days there is a high volume with negativity in the stock, and after that there is a recovery happened somewhere around 27 and 24 millions. So this is the period in which a lot of actions happened with a high effort and versus the high results, where largely strong hands and then institutional investors were accumulating the shares. And the next event is on the November 24, where which is the highest in Novo Nordisk history. 73.62 million shares were on the transaction on particular day due to a trial failure. So which is a high volume with a high price action, 5.58 negative price drop. So again, it is a harmony, high effort versus high results. And yesterday's event is one such event where a very high volume, around 67.5 million, but this time the price is moved around 7.3 percentage. So the critical point to remember here, in a normal day, the price actions versus the volume, and comparing with the actually very high volume day with the price, this is where we apply the principles of Wyckoff, where we have to see any divergence are happening or it is a harmony with the price versus the volume. Coming back to the original yesterday's concept, what we have seen it, when in the markup, when a high volume along with a high price drop, this is basically a day there is some significant uh, event happening on that particular day. So we can see here the stock is getting accumulated at very high volume, and on those days the price actions also can predictably gone up certain cases, and in certain cases volume is very high, but the price bar is not that proportional. So that's another indication that there is an absorption happening from the opposite direction, even though very high volume, but there is high absorption activities where the price is kept within a particular range to absorb the stocks. So if you would like to know more about what is exactly happening with the price versus volume and effort versus results, cause versus effect, and I have created a lot of videos in my channel. If you go to view full list here, there are many such detailedly explaining case by case on a different stocks. If you like to have more videos like this and know more about Wyckoff related analysis, keep watching and subscribe, and leave your comments what you would like to know more about. That will help me to create more such videos and do more stock analysis. Thank you.